So, what if the entire crypto market is basically a house of cards, just waiting for one piece to fall? That's the incredibly stark warning coming from one of the most famous investors on the planet. And today, we're going to break down exactly why he thinks a disaster is just around the corner.
And that's not me saying it. That is a direct quote from Michael Burry from just this year. Look, when the guy who famously predicted the 2008 financial crisis says something like that, you really, really have to pay attention. His track record is why. I mean, if you've seen the movie The Big Short, you know exactly who we're talking about. Michael Burry is the investor who saw the 2008 housing crisis coming when literally no one else did. He made an absolute fortune betting against the market. And now he's aiming his sights squarely at crypto. And what he sees is, well, it's deeply unsettling.
Okay, so what's his big argument here? What's the new Big Short? Well, Burry boils it all down to this really powerful historical analogy. He calls Bitcoin our era's tulip bulb.
You know, he's talking about the Dutch tulip mania way back in the 1600s. It was this crazy time when speculation drove the price of a single tulip bulb, get this, to the cost of a mansion in Amsterdam. And then, poof, it all came crashing down by over 90%. Burry sees a direct and frankly terrifying parallel to today's crypto market. But here's where Burry says it gets even scarier. See, his point is that tulips, at the very least, were a physical flower. You know, they had some ornamental value. But Bitcoin, in his view, it's just code. He argues its main use case has become, well, illicit activity. Think money laundering, ransomware, all that stuff, which in his mind makes this bubble way, way more dangerous. All right, but this isn't just some history lesson. Burry is pointing to some seriously alarming data from right now, from the current market downturn to back all of this up.
So let's talk numbers. Since hitting that insane all-time high of $126,000 back in late 2025, Bitcoin has taken an absolute beating. We're talking a drop of around 40%. Now, a drop like that is huge no matter how you slice it. But it's how long this drop has been going on that really has people worried. And when you look at the data, yeah, the story gets pretty worrying. We are now in our fourth straight month of decline. That is the longest bear market we've seen since the big crypto winter of 2018. And market sentiment? It is absolutely plunged into extreme fear. So this isn't just a dip, right? The data is telling us this could be a fundamental rethink of this whole asset class.
So Burry lays out this absolutely chilling domino effect. It's a three-stage meltdown scenario, and it's all triggered by very specific price points. Let's walk through each one. All right, first up, we have the first domino. He calls it the institutional test. And the number you have to remember here is $70,000. So why 70 grand? What's so special about that number? Well, that's because it's pretty much the average price that all the big institutions, the big money, bought in at. The second Bitcoin dips below that mark, all of their huge positions flip into the red. And what happens then? Risk departments start screaming sell. Money starts pouring out of those Bitcoin spot ETFs. And then you get margin calls. That forces these guys to sell other stuff like their stocks and gold just to cover their crypto losses. And right there, that's how the contagion starts to spread. Okay, domino number 2. This one is what Burry calls a corporate ticking time bomb. And the risk is almost all focused on one single, massively exposed company, MicroStrategy.
I mean, it's hard to overstate this. MicroStrategy is the biggest corporate holder of Bitcoin in the world. They have a mind-boggling 713,000 coins on their books. To give you some perspective, they own almost 3.5% of every Bitcoin that will ever exist. It's insane.
And this is the number that really matters. Their average buy-in price, about $76,052 per coin. So with the market price way below that right now, their entire multi-billion-dollar bet is officially completely underwater. And you can bet the market has noticed. The company's value, its market cap, has just been destroyed. It's fallen over 60%, dropping from $128 billion in July of 2025 to just $40 billion today. Its value is almost entirely tied to an asset it's now losing a fortune on. So here's the really crucial part.
Burry's warning is that as the price keeps falling, the market gets absolutely terrified about the moment MicroStrategy might be forced to liquidate to sell all that Bitcoin. And that fear alone, it creates this massive overhang of potential selling pressure that just crushes sentiment and drives the price down, even if the company doesn't actually sell a single coin.
And that brings us to the final domino, and honestly, the most dangerous part of Burry's whole scenario, the systemic meltdown. This is what he thinks gets triggered if Bitcoin falls all the way to $50,000, because this is where the actual infrastructure of the network starts to crumble.
Okay, so you gotta remember, the entire Bitcoin network is kept alive. It's secured by miners, these powerful computers solving problems 24/7. But Burry asks a really simple and terrifying question. What happens when the people running the network just can't afford to anymore? Yeah, this is a concept known as the miner capitulation cascade. It's a death spiral, basically. See, below $50,000, a whole lot of mining operations just aren't profitable anymore. So to cover their huge electricity and hardware bills, they're forced to sell the Bitcoin they've been saving up. That floods the market with new supply, which of course pushes prices down even more. So more miners shut down their rigs, the network's total computing power, the hash rate, plummets. And when that happens, it sparks real, legitimate fears about the network's security. And that just creates a feedback loop of more panic and more selling. And this is what Burry is most afraid of. He's worried that this cascade of forced selling in crypto won't stay in crypto. It could spread to other markets, especially things like tokenized precious metals, digital assets that might not be fully backed by the real thing. He calls it a black hole event, a situation where everyone is trying to sell and there are literally no buyers left. So, okay, after walking through this whole domino effect, it leaves us with the big question. Is this really a modern-day tulip mania just waiting to implode? And this last quote from Burry, I think it really gets to the core of his whole argument. For him, it's not really about the tech itself. The real problem is the leverage. It's this massive, fragile tower of debt that's been built on top of crypto. He believes the market isn't held up by any real fundamental value, but by borrowed money and a good story. And he thinks that story is finally starting to fall apart. So there it is, a cascade, a domino effect triggered by a few key price points that could lead from institutional pain all the way to a systemic collapse. Look, Michael Burry saw the last financial storm coming when almost nobody else did. The question we all have to ask now is he right about this one too?